Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Central China Securities Co. Limited annual report. Central China Securities Co. Limited offers a wide range of services to its customers. At the core of its operations is securities brokerage, where it trades on behalf of clients in various financial products such as stocks, funds, bonds, derivatives, and more. In addition to brokerage services, the company provides financing options through margin lending and securities lending. It also offers commodity and financial futures brokerage services, catering to customers with diverse investment needs. Wealth management is another key area of focus, where experts provide personalized advice on investments and asset allocation. The company's corporate finance division offers a range of services including equity and debt financing, mergers and acquisitions, and refinancing transactions. It also provides market information and advisory services to help clients make informed investment decisions. Furthermore, Central China Securities Co. Limited is involved in various other businesses such as asset management, direct investment, and fund management. It offers futures investment advisory services and equity and venture capital investment opportunities. The company's sponsorship underwriting services allow it to support various projects and initiatives through financial backing. Overall, the breadth of services offered by Central China Securities Co. Limited makes it a comprehensive financial solutions provider in the region. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company's financial performance can be identified by examining the various business segments that contribute to its overall revenue. Revenue growth is primarily driven by the wealth management business, which saw an increase of RMB 141 million on page 36, and an increase in revenue from agency trading of securities on page 58. The proprietary business also contributed to revenue growth, with investment revenues from publicly offered stocks, bonds, funds, derivatives, and other approved products increasing on page 38. In addition, income from headquarters and others saw a significant increase of RMB 102 million on page 36, while the credit business experienced an increase in interest, income from financing business on page 58. The overseas business also showed growth, with a net fee and commission income increase of RMB 97,704.8 on page 326. On the other hand, revenue decline was primarily driven by the investment banking business, which saw a significant decrease of -59.2% on page 326. The futures business also experienced a decline, with an operating income decrease of -8,100.36 on page 326. The investment management business suffered from a decline in operating income as well, with a decrease of -17,061.57 on page 326. Overall, the company's revenue growth and decline can be attributed to various factors across different business segments, highlighting the importance of monitoring and analyzing each segment's performance to inform strategic decisions. The net income of a company has shown both increases and decreases over the years. In FY 2025, the net income was RMB 907,273,060.53, which is a 26.2% increase from FY 2024's net income of RMB 719,044,687.48. However, there were also instances where the net income decreased, with a notable decrease of -38% in FY 2025 compared to FY 2024. Profit margins have also shown mixed results. The overall profit margin decreased by 14.3% from FY 2024 to FY 2025, with a ratio of 4.81 in FY 2025 compared to 5.43 in FY 2024. However, there were some businesses that showed an increase in profit margins, such as the Central China Equity Exchange Co. Limited, which saw its margin increase from -18.95% in 2024 to 105.35% in 2025. The mixed results of net income and profit margins can be attributed to various factors, including changes in business operations and market conditions. The company's securities brokerage business, for example, showed a decrease in profit margins from FY 2024 to FY 2025, while its futures brokerage business saw an increase. Overall, the company's financial performance is complex and requires careful analysis of different businesses in years. The company is generating positive operating cash flow in FY 2025, as evident from the various financial statements and reports provided. The net cash flow from operating activities is RMB 7.381 billion, indicating a significant inflow of cash into the business. This positive trend is further supported by the cash inflow from operating activities, which amounts to RMB 11.634 billion, while the cash outflow from operating activities is only RMB 4.253 billion. The net increase in cash and cash equivalents is also substantial, standing at 3,791,386,776.22 RMB. The company's ability to generate positive operating cash flow is a testament to its financial health and stability. This trend is consistent across multiple pages of the report, including page 26, page 138, page 160, page 172, page 173, page 180, page 281, and page 343. Overall, the data suggests that the company has successfully managed its operating activities to generate a significant amount of cash in FY 2025. The company's debt level has undergone significant changes over the past year. Initially, it appeared that total debt had decreased from RMB 3,962,603,712.35 in 2024 to RMB 3,030,308,361.12 in 2025. However, this may be an error or misinterpretation due to conflicting information on page 310, which states that total financial liabilities increased from $0 to RMB 4,336,263.81. Furthermore, short-term loans and bonds payable saw a significant increase. In contrast, interest expenses have decreased substantially across various reports. A notable decrease of 23.2% was observed in FY 2025 compared to FY 2024, with interest expenses decreasing from RMB 583,403,257.39 to RMB 448,077,603.94. Additionally, other reports also indicate a significant reduction in interest expenses, ranging from 19.7% to 23%. These findings suggest that the company has made efforts to reduce its debt burden and lower its interest expenses. Management's outlook on company strategy: the management of the company expects the equity market to continue growing, while fixed-income directional businesses and asset management are expected to remain weak. To address this, small and medium-sized securities firms need to upgrade and enhance their capital utilization rate. In line with national strategies, the company aims to drive management enhancements, improve operational quality and efficiency, and achieve steady growth through its 1+2+4+N target task system. The company will focus on high-quality development and growth by expanding market share and leveraging its institutional client service platform. The company plans to align with national strategy for scientific and technological innovation by serving the real economy through fund establishment, diversification, and capacity building in hard technology sectors such as AI, high-end manufacturing, and new materials. The primary equity investment market is expected to continue recovering in 2026, driven by policy support and capital supply. To achieve its goals, the company will maintain stable operations in its proprietary business, while focusing on balancing allocations across major asset classes and increasing investments in quantitative products for enhanced capabilities in fixed income plus business. Central China International will consolidate and enhance its service capabilities, focusing on cultivating securities brokerage business with high-quality institutional clients and individuals. The company also emphasizes the importance of inclusiveness and adaptability of the capital market system, promoting entry of medium to long-term funds into the market. It aims to shift from price competition to value competition by leveraging unique resource endowments and comparative advantages through business innovation, mergers and acquisitions, and restructuring. In addition, the company will strengthen key supports for steady development, enhance compliance and risk control, and improve operational efficiency. The management has successfully implemented its corporate strategy, focusing on retail clients and a customer-centric approach, and is promoting a comprehensive risk management system to provide decision-making basis for the company. The company has made several strategic moves through acquisitions and divestitures to restructure its operations. Acquisitions are a key part of the company's growth strategy. Notably, material acquisitions have been made, allowing the company to expand its capabilities and reach new markets. Additionally, the repurchase of shares by the company demonstrates its commitment to maintaining control and stability in its ownership structure. On the other hand, divestitures have also played a significant role in the company's transformation. The merger with another entity has enabled the company to combine resources and expertise, leading to increased efficiency and competitiveness. Furthermore, the division of certain business units has allowed the company to focus on core operations and eliminate non-core assets. The dissolution of some business units has also been a part of the company's divestiture strategy, enabling it to shed underperforming or redundant assets. Moreover, the transformation of the company itself has involved significant changes in its organizational structure and operational processes. Finally, the sale of financial assets under repurchase agreements has helped the company to manage its liquidity and reduce risk. Overall, these acquisitions and divestitures demonstrate the company's adaptability and willingness to make strategic decisions to drive growth and improvement. The company has a history of paying dividends to its shareholders. Multiple pages confirm this, indicating a consistent practice of distributing profits to investors. On the other hand, there is limited information available regarding share buybacks. While some pages mention reducing investment or share buybacks without specifying amounts, it is unclear whether these are actual share buyback transactions. One page 241 mentions declared cash dividends with negative values, which could imply share buybacks. However, this is not explicitly stated and may be a matter of interpretation. Overall, the available information suggests that the company has primarily focused on paying dividends to its shareholders rather than engaging in share buybacks. That concludes the financial summary for Central China Securities Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.